Next, we're going to review the breadth section of the website pages, including the breadth compilation charts and the breadth snapshot. On the right side of the page, the breadth snapshot is basically a point in time, yesterday, a week ago, a month ago, and a quarter ago, of all the data you see on the chart on the left side, along with a little additional data, advancing declining issues, advancing declining volume, and percent making highs and lows that aren't in this chart but are maybe in other charts around the site. Now, when we go over and take a look at the breadth compilation chart itself, let's expand it so we can see it closer. And we can see here this has a lot of different breadth values in it, so let's start at the top and work our way down. The top pane is the new high, new low differential, which is the new highs for the day minus the new lows for the day. And then you have two moving averages on it. Now, what this basically comes down to is when all three of these are above zero, you're on buy signals. When all three of them have crossed below zero, you're on a sell signal, and there are various warnings in between. So that's how we work with our first. It's a longer term indicator. Then we move down to the advanced decline line, cumulative, which is also a longer term indicator. Our third window down, we start going through our moving averages. The 200-day moving average is on top, so this is the percentage of names above the 200-day moving average. The next is the percent above the 50-day moving average, and the final is the percent above the 20-day moving average. Using these three together, we can get an idea of where the markets are trending and progressing or digressing, or I guess deteriorating. And then we move down from there to the Mcclellan Summation, which basically is a great intermediate indicator to give us an idea of both buy and sell signals, but also basic levels to get an idea of what the overall longer trend still is on the breadth side. The Mcclellan Oscillator goes with the summation, and the breadth thrust is basically a bound Mcclellan Oscillator so that we can better compare different sectors, subsector peers against each other. And that's what these compilation charts are to do, is to give us the opportunity to compare all these different sectors or say subsectors against each other and see how they are doing from a participation standpoint. Now, all of these breadth measures have long-standing history in the market world. However, the difference is we take them down to a level that you rarely see, allowing us to compare underneath the surface of the markets at a much greater level. So breadth, or relative participation, is our third pillar of relative strength that we go to try to figure out if this is an area of the markets that we want to concentrate on or that we want to avoid at any given point.